Have you ever wondered why China's rich are getting richer, even though the economy keeps growing for everyone? A new study from Tsinghua University looked at tens of thousands of Chinese households and found that the answer isn't just about jobs or education, it's about what people own, specifically housing and financial assets. Between 2012 and 2021, income inequality in China kept rising, even after COVID-19. And this study shows that homes and investments, not just salaries, are driving the wealth gap in China's cities today. In this video, we'll explore what the researchers discovered, how assets changed urban China, and why financial investments now matter even more than real estate.
For most families in China, housing is the main form of wealth. After the government allowed people to buy their own homes in the 1990s, property ownership exploded, and so did prices. Today, over 90% of urban families own at least one home. But this created a new divide. Those who bought early saw their wealth soar, while younger and poorer families struggle to buy even a small apartment. The study found that housing assets do increase inequality, but they're not the biggest driver anymore. Surprisingly, it's another kind of asset that matters even more.
Only around 14% of Chinese households invest in stocks, bonds, or mutual funds, but those who do are gaining far more wealth than homeowners alone. Financial assets generate faster and higher returns than real estate, and unlike housing, which most families already have, financial investments are concentrated among the rich and highly educated. The study found that financial assets, FAs, have a stronger effect on inequality than housing assets, HAs. In simple terms, it's no longer just about owning a home. It's about having extra money to invest. That's how China's upper middle and wealthy classes are pulling ahead, through capital income, not wages.
Not everyone has the same chance to build wealth. Families with higher socioeconomic status, better jobs, higher education, or party membership are more likely to own both types of assets. They know how to invest, have access to financial markets, and can take advantage of rising property values. Where you live also matters. In provinces with higher marketization, like Shanghai, Guangdong, or Zhejiang, people have more access to financial products and higher property values. That means regional inequality adds another layer. Urban wealth gaps are wider in developed coastal cities than in inland areas. So both family background and location make a huge difference in who can profit from China's booming economy.
The researchers argue that inequality in China today isn't just about paychecks, it's structural. It's built into the country's asset system. Policies that raise wages or reduce taxes might help a little, but they won't close the gap unless ordinary families can also access financial investments. The study suggests that improving financial literacy, expanding access to investment tools, and stabilizing housing prices could make the economy fairer. In other words, to fix inequality, China needs to make wealth creation, not just income, more equal.
So what does this mean for the future of China's cities? It means that the next stage of development won't just be about building roads or factories. It'll be about who owns the assets that generate wealth. As China's middle class grows, understanding this divide between income and assets will be key to understanding the new shape of Chinese society. Because in modern China, it's not just what you earn, it's what you own. So, what do you think about China's growing wealth gap? Do you believe owning a home or investing in stocks is still the best way to build wealth today? Or are things changing? I'd love to hear your thoughts in the comments. What's the biggest challenge you think people face when trying to grow their savings or invest for the future? If you found this video interesting, please like and subscribe. And don't forget to check out our other videos on China's economy and everyday life.